Jim Cramer just warned that Monday could be like 1989's Black Monday. And I gotta say, the charts are kind of similar. Take a listen to literally this 14-second long clip.
The president doesn't try to reach out and reward these countries and companies that play by the rules in the 1987 scenario, the one where we went down 3 days and then down 22% on Monday, has the most cogency. We will not have to wait out too long, will we? We'll know by Monday.
Seems pretty simple to me. And I mean, from what I'm seeing, you don't really have any positive headlines over this weekend on trade. Nothing that is substantial. Now, of course, when Jim Cramer says something, markets tend to do the opposite. Okay? But we do have a big problem here. Apparently, hedge funds are facing Lehman-style margin calls due to the market crash triggered by President Donald Trump's tariffs, according to the Daily Mail. Many now fear a repeat of the devastating Black Monday from October 19th, 1987, when the Dow Jones Industrial Average plummeted by 22.6%, the largest one-day percentage drop in history. I mean, these guys are clearly not watching the channel. Like, it's scary that they manage people's money. I've been saying to get out of margin for weeks now, but apparently they're still in margin. Doesn't make a whole lot of sense to me. And they're getting these margin calls. That is a very slippery slope. Now look at the chart from 1987 and the Black Monday event and where we are today. They do look kind of eerily similar to a certain extent, especially these two candles here. Almost identical. If we have a really big drawdown coming tomorrow. And there's a lot of people talking about that. Now, there's also a lot of people talking about this. This is a chart from Bespoke that says red dots on the chart are the 3 prior times we've had 2 2-day declines of negative 10% or more. Okay, we just fell like 5% on Thursday, and then we fell almost 6% on Friday. So you're down like 11% in 2 days. It almost never happens. And every time it happens, historically, it's a bottom, right? Why? Okay, context is key here. Normally, if the markets sell off 10% in 2 days, it's because someone caved. Usually the Fed that says, okay, we're done playing games. We're going to cut rates. We're going to bail you out. Like, at that point, usually shit has hit the fan. Can we agree on that? Usually it's turning points, right? Whether you're thinking of COVID or you're thinking of 0809 or, the Black Monday event, right? That's a pivot point. This time around, Jerome Powell doesn't seem to want to pivot. Trump really has no plans in pivoting from what I can tell. Nobody's panicking yet. That's why a Black Monday scenario could happen. There's an old saying on Wall Street that goes like this. When policymakers start panicking, Wall Street will stop panicking. And that sums this chart up. Until Jerome Powell panics and Trump panics, Wall Street's not going to stop panicking. It's like a really expensive game of chicken right now. People are trying to get, or Wall Street's really trying to get Trump to cave, because these tariffs, it wasn't even like he pulled out the bazooka, economically speaking. He dropped the A-bomb, economically speaking, on this economy. I mean, we all know the Smoot-Hawley Tariff Act of 1930, regarded as the worst piece of legislation ever passed in the Senate. Well, this is 3 to 4 times worse than that. or more extreme than that. And back then, only 3% of our GDP was global trade. Today, it's 13%. I mean, this is what some people would say a depression kind of catalyst or shock to the economy. Even if theoretically all companies tried to do contract manufacturing in the US that is doing it in Vietnam or China, these other countries, there is not enough capacity in the US. I mean, I don't know what the percentage would be if 50% of companies would just be screwed, or if, 80% would be screwed. Hard to tell you those exact numbers. But it's they nuke the economy, right? And as I shared with you in yesterday's video from Morgan Housel, I really urge you guys to watch this book or read this book. There's a lot of fascinating things in this book. One of which I'll just point out, by the way, is we all know Warren Buffett. We know Charlie Munger, but there was another guy that was a part of that group, but he used margin and he leveraged at the wrong times and essentially lost all of his money. Okay, not to get into that story too much, but that's why you don't want to be in margin right now. Nonetheless, The Psychology of Money. It's like 200 pages. Read it if you have not. Okay, should take 2 days if you're a good reader. He wrote on X, the author of this book. He says, spoke to an investor who said if the market actually processes what happened yesterday, it would be down 30 to 40%. The fact that it is not is either denial or a belief that it will soon be reversed. That's true, right? People think that it's going to be reversed. And as of now, there's no signs of that. So Black Monday is a possible event. Now, a couple things you guys need to know about a Black Monday style of event. The Fed will cave. They'll have to. Okay? If the markets are down 10, 15% tomorrow, I don't know about 20%. That's a little extreme. The Fed's going to have to cave. Okay? Because at that point, if they don't, you could be at the point of no coming back from, right? The point of no return. The Fed will probably come out tomorrow night and cut rates and just accept whatever inflation pressure that they are faced with. That's number one. So if you're down 10, 15% tomorrow, it probably makes sense to buy quite a bit, okay? Although we still have that recession risk, but if the Fed were to come out and dramatically lower rates, then that risk does fall as well. So that's number one. Number two, it's important to remember that we don't know if we're going to have a Black Monday kind of event, but the stage is set. I will agree with Jim Cramer there. There's no progress on the whole, tariff negotiations, if that's even what it is. Trump basically said it's not a negotiation. Powell's not freaking out. Hedge funds are getting margin called. The reality of this situation is a lot worse than the markets are even pricing in by far. The setup is there, but it's not a guarantee that it happens. And number three, if you guys have never lived through a circuit breaker, then you started investing after 2020. Good news is I have, and I'll explain how it works. So when indexes fall 7%, they get halted for 15 minutes. Fine. Once they fall 10%, they get halted for another 15 minutes. Maybe it's 11%. Doesn't. Thematics of it does not matter. It's 10, 11% around there. If it falls 20%, then you close for the day. So keep that in mind. If we are somehow down like 18% or something, the markets could close tomorrow. That would be kind of hard to see in my view. I mean, 20% down would put you to like 400 on the SPY. That would be crazy. I mean, that would actually put you back to like the midpoint of your trading range in 2022 for the most part. I feel like you'd want to do quite a bit of shopping in that event because by Tuesday, I think rates are probably going to be down at least 1% or 2%. One of the big failures the Fed made with the Smoot-Hawley Tariff Act was they didn't accommodate enough. Now, the Federal Reserve was a lot different in 1930s than it is today, but the Fed would rather have slightly higher inflation and a better economy, right? If the stock market sells off like that, you've never not had a recession. You've never not had a deep recession at that. It's something the Fed will be forced to respond to with emergency rate cuts. Okay. And maybe it doesn't happen tomorrow. Maybe things are just fine. But people talking about Black Monday in and of itself kind of raises the odds of a Black Monday event. And the markets, they want Trump to cave. They want Powell to cave. And there's a bit of a buyer's strike going on right now. That's why Thursday was such a red day. That's why Friday was such a red day. Nobody wants to get ahead of the, nuking of the economy. People don't know where earnings are going to be. They don't know what's going to happen, right? How do you invest with that degree of, I don't know. You really can't. Okay, so we do have a couple of headlines coming out. This one says hedge funds have been hit with largest margin calls since 2020 and the COVID crisis. Now, this one is from Financial Times. Now, the European Union agrees on a first set of countermeasures targeting $28 billion worth of U.S. imports. So, yeah, they're retaliating to some degree. But look at this news. India is attempting to negotiate a bilateral trade deal with the U.S. to bring down tariffs. That could be positive, but again, I don't know if that's enough to save this market or whatever could happen tomorrow. Now, Scott Besson says over 50 countries approached admin on lowering tariffs. That's also a really positive sounding headline. And you can see here some news being reiterated from Friday. Vietnam has sent President Trump a letter offering to remove all tariffs on U.S. imports after Trump imposed a 46% tariff on the country, per Bloomberg. Bear Market Ramp Capital on X says, good morning. One more day until Black Monday. Besson says tariffs do not risk a recession. I don't know what dude, you really can't make this up. Okay. I don't know if they're just going to try to blame the recession on Biden, right? Is that what they're doing here? I'm so lost. That or they're smoking something. Respectfully. Inverse Kramer on X says Black Monday or bounce. Call it. And yeah, there's a lot of people that say Black Monday. One user on X says pretty chill day, I'd assume. Probably negative 4% or so, unless there's any news regarding the tariffs from Trump before then. Now we think 4% down is a chill day. And another comment here on this post says, unless Trump announces a major policy reversal on Sunday, it will make Black Monday look like a walk in the park. He likely will, though. He knows he's wrong in all of this, and he knows Congress will likely remove him from office if he doesn't. I mean, honestly, that is a real risk. If we were to have some kind of Black Monday crash and therefore likely already be in a recession, you do face the risk of your supporters turning against you. I think that is a good point. I mean, your supporters, Trump supporters, they're not just going to turn on him for no reason. But if they start losing their jobs, that would be a problem. And again, mark my words, if we have a Black Monday style crash, even something like Friday again, you're going to see the Fed react to that, especially like 10% plus down. The Fed's going to have no choice but to come out and accommodate markets. There's no choice at that point, because I'll bet your ass on it, Jerome Powell does not want his legacy to be one of this. You fought so hard to keep the economy out of a recession, to keep inflation making progress coming down, and then Trump gets into office, does a tariff act, and they didn't see the similarities from the Depression, and were just too late, sat on their hands, didn't do anything about it. People lost their jobs, and we had a deep recession. That's not what Powell wants his legacy to be. You also need to remember that as markets come down, as consumers pull back, you're not going to have inflation. Inflation's not going to occur when people are losing jobs. It just doesn't happen. Companies will have to just take it in the margin and let it be that. And then the question is, what do earnings look like on the S&P? And that's where things could theoretically get nasty. Now, honestly, I think at this point, you're either prepared for this or not. Hopefully, my goal has been on this channel to have as many people prepared for this opportunity as possible. If we get a Black Monday event or not, it's really nothing that can stop that, especially when you're talking about margin calls. It's either going to happen or it's not. If it doesn't happen, who knows what happens tomorrow? I think you still want to be prepared. There's 3 things to do right now. Number 1, get out of recession vulnerable stocks. Unprofitable names that need to raise capital or something. I've talked about this, but if you're a small cap stock, whatever, doesn't even matter the size of the stock really. During a bull market and you want to raise capital, nobody cares. The stock might fall 5, 10, 15%. No big deal. You're back to business as usual over the next couple of days. If you are a small cap name, any size name, and you want to raise capital during a recession or some kind of big market drawdown, you could fall 50%, right? That is a company ending move to some degree during a recession. People don't forgive that because everyone jumps to the whole they're going bankrupt conclusion. So you want to get out of those stocks. Number 1, you want to get out of margin. If we don't have a Black Monday crash tomorrow, that's ideal. Okay. If we do, you're probably going to get margin called. And again, hopefully that's not a large percentage of you, because I've pounded the table on this for weeks now. Hopefully you're not in any margin. Number 3, raise as much cash as possible. That could be by selling those recession stocks. Perhaps, I'm not a financial advisor, I'm not a financial planner. Contact one if you're curious. But generally, working more, picking up shifts at your job, mowing lawns. Okay, you'd be surprised. As a kid, during snowstorms, I would go out at 6 o'clock, 5 o'clock in the morning and knock on doors and ask people if they want their driveway shoveled for $15. I mean, I would make $200-300 a day doing that. Snowstorms, right? Group of us friends, would do really well. You could do that with lawn care services. You got to undercut, right? What services cost. But that's a way of making extra money. Taking back your spare change. I mean, $100 here, $100 there goes a long way during a crisis, okay? Let alone, thousands or whatnot. So that's what I mean by raise as much cash as possible. If you normally paid, your auto loan like twice the amount or a couple $100 extra bucks, don't do that. Bad idea. I'm not a financial advisor, not a financial planner. But that's just my view, a bad idea. I would save as much money as possible. If you have credit card bills and normally you pay extra, I think skipping that extra payment this month could make sense. Okay. Again, not a financial advisor, not a financial planner. Okay. But think getting creative to try to figure out ways of saving extra money right now. That's what I mean by raise as much cash as possible. It doesn't necessarily have to be just in the markets kind of perspective. Okay, now before we go ahead and conclude this video, I just want to acknowledge tomorrow you have a speech from Fed Kugler and consumer credit change, but that's it. Tuesday, you have Fed Daily that speaks, the NFIB Business Optimism Index, and that's it. On Wednesday, you have the FOMC Minutes, Fed Barkin that speaks. That's it. So Monday, Tuesday, Wednesday, there's not much for events. On Thursday, you have core CPI month over month, year over year, headline month over month, and headline year over year. Initial jobless claims, Fed Goolsbee and Fed Logan that speak. On Friday, you're going to have PPI, month over month, core, all of that. Michigan consumer sentiment as well, which has been a pretty big catalyst for the last, couple of months. So not a huge week this week as far as, economic data. But again, CPI, PPI, Michigan consumer sentiment, Thursday and Friday could be big catalysts. Now, you also have earnings Monday and after hours. So tomorrow and after hours from Levi's and Dave & Buster's. Now, I'm willing to bet that a lot of Levi's business or production comes from East Asia, right? That's the area that really got clapped from these tariffs. What do they say about that? How does that impact margins? That'll give us a little bit better of a guidance to go off of for the rest of the sector, but for other companies that are also affected, like Nike and maybe Apple, right? Some large names could have implications there. Walgreens reports Tuesday pre-market. Wednesday pre-market, you have Delta, Constellation Brands in after hours. Thursday pre-market, CarMax. And Friday pre-market, you have JP Morgan, BlackRock, Wells Fargo, BNY, Morgan Stanley. What did the banks have to say about this? Because the banks were especially hard hit during Friday's sell-off. I believe Citibank was down like 12%. Something actually crazy. 8%. I mean, like, they are falling off of a cliff. It is unrelenting for the banks as well. So what do they have to say about all of this? Okay, that's going to be another big thing to be watching for. So again, at this point, you're either prepared for a large crash or not. We don't know what's going to happen, but it could be a self-fulfilling prophecy. Unless we get some good headlines coming out tonight, I do see the risk is of a sharp downside move coming tomorrow, but I wouldn't be surprised if we recovered as well, right? We'll see. Do people step in and buy this market or not? You're at a bit of a buyer's strike right now over the last 2 days. People don't want to step out and buy when Trump just dropped essentially a nuke on the economy. So with that said, let me know what you think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.